Real estate investment trusts are a recipe for some pretty good passive income. On today's show, we will be highlighting 5 of the best Canadian and American REITs to turn your portfolio into a money generator, and we'll begin right now. For the most part, Canadian and US REITs are very similar, and they function very much the same when it comes to an end investor. One big difference between them is that Canadian REITs are classified as unit trusts or mutual fund trusts. American REITs are classified as corporations. The other major difference is that American REITs are required by law to distribute 90% of their profits to their investors. In a severe financial crisis, this 90% can be waived, but these exceptions tend to be very rare. With a Canadian REIT, they are not required to distribute a specific percentage of their profits, though they generally do pass on as much as they can, up to 100%, so they do not get taxed on that amount. Canadian REITs can pull back or discontinue their distributions if they decide to do so. Before we jump into the REITs, it is also good to remember that the distributions you receive from a REIT is 100% taxable. Thus, the best place for holding a REIT is in one of your registered accounts. Your Canadian REITs are perfectly at home in either your TFSA or your RRSP. Your American REITs can also go in either, but if you place them in your TFSA, you will be charged a 15% withholding tax that you can claim back at tax time. Personally, I hold mine in my Wealthsimple USD RRSP just to save on the paperwork. We will begin with number 5, and since Canada has home court advantage, we will start with an American REIT. Starting off for the USA, we have PennyMac Mortgage Investment Trust of Beneficial Interest. Whew, try to fit that all on a business card, which has a ticker of PMT. They are based out of California and primarily invest in residential mortgage loans and mortgage-related assets. They have a nice dividend yield of 11.204%, and that is paid out quarterly in the form of 47 cents USD per share. Their EPS is 0.26 with a PE ratio of 65.2. Now, most of these stocks do not have any growth or have slid down a little over the last year, and this one is no exception to that. So let's move over to Canada. Kicking off for Canada at number 5, we have Slate Grocery REIT with a ticker of SGR.UN. They are based out of Toronto and they hold commercial properties in the United States. Their dividend yield is a solid 6.754% that is paid out monthly in the form of 7.2 cents USD per share. Yes, that is one of those Canadian stocks on the TSX that pays in American dollars. Their EPS is 0.69 with a PE ratio of 6.20. We are not really here for the growth, but this REIT had a stellar ROI over the last year of 135.2%, which of course does not include their dividends. Not too shabby. Back to the US, and at number 4, we have Ready Capital Corporation, which has a ticker of RC. Not to be confused with RC Cola, totally different company. They are based out of New York and primarily invest in small multifamily office, retail, mixed use, and warehouse properties. They have a nice dividend yield of 11.268% that is paid out quarterly in the form of 42 cents USD per share. Their EPS is 2.18 with a PE ratio of 7. They do have a little bit of growth to show with an ROI of 108.5%, which does not include that dividend. Moving back over to Canada, at number 4, we have BTB Real Estate Investment Trust with a ticker of BTB.UN. They are based out of Montreal and they hold retail, office, and industrial properties in Canada. Their dividend yield is a solid 6.977% that is paid out monthly in the form of 2.5 cents per share. Their EPS is 0.69 with a PE ratio of 6.20. They have a tiny amount of growth, but really their story, like the others, is the dividends. Back in the US, let's hit number 3, and we have Annaly Capital Management Inc., which has a ticker of NLY. They are based out of New York, and they are also one of the larger REITs in the U.S. with both residential and commercial properties. They have a nice dividend yield of 12.847% that is paid out quarterly in the form of 22 cents USD per share. Their EPS is 1.61 with a PE ratio of 4.40. Not much to report on growth, as they have been, well, I was going to say a little flat, but they were down a little bit over the last year. Moving back over to Canada, bringing up number 3, we have Slate Office REIT with a ticker of SOT.UN. They are based out of Toronto, and they hold a slate, get it, slate, of 34 commercial properties throughout Canada. They have a pretty good dividend yield of 7.882%. That is paid out monthly in the form of 3.3 cents per share. Their EPS is 0.69 with a PE ratio of 7.40. We are not really here for the growth, but in this case, this REIT did manage an ROI of 113.5%, not including their distributions. Let's head on back to the U.S. and for our number 2 American spot, we have Armour Residential REIT Inc., which has a ticker of ARR. They are based out of Florida and primarily invest in residential mortgage-backed securities. They have a very solid dividend yield of 14.388% that is paid out monthly in the form of 10 cents USD per share. Their EPS is 0.13 with a PE ratio of 64.8. Their growth has been down a little over the last year, so you are only here for the dividends, and with some negative growth, always worth paying some extra attention. With that being said, I do have this REIT in my Wealthsimple USD RRSP. Back over to Canada in our number 2 spot, we have True North Commercial Real Estate Investment Trust with a ticker of TNT.UN. They are based out of Toronto, and their commercial properties are in Alberta, BC, New Brunswick, Nova Scotia, and Ontario. They have a pretty good dividend yield of 8.414% that is paid out monthly in the form of 5 cents per share. Their EPS is 0.58 with a PE ratio of 12.40. This is a REIT where you are only here for the dividends. The dividends are your only return on this investment in the last year, as growth has really not been a priority for them. Moving over to the US for our US number 1 spot, our top American spot, we have Cherry Hill Mortgage Corporation, which has a ticker of CHMI. They are based out of New Jersey and primarily invest in residential mortgage assets. They have the best dividend yield of the day with 14.439% that is paid out quarterly in the form of 27 cents USD per share. Their EPS is 0.14 with a PE ratio of 54.6. Their growth has been down a little over the last year, but once again, we are here for the dividends. With that being said, this is a REIT I would invest in, but would also keep it on my pay close attention to list. And back over to Canada. So for our top Canadian spot, we have Inovalis Real Estate Investment Trust with a ticker of INO.UN. They are based out of Toronto, but their real estate holdings are in Germany and France. They have a very nice dividend yield of 9.036% that is paid out monthly in the form of 6.9 cents per share. Their EPS is 0.93 with a PE ratio of 9.90. This is, once again, a REIT that you're only here for the dividends. I guess now the question is, who has the better REITs? Obviously, the American REITs have the higher dividends, but with that comes more risk and very little ROI outside of those dividends. The Canadians have lower dividends, but you are seeing a little more growth. Factoring in growth, the Slate REITs may be the better investment than the American ones. However, in the name of diversification, there is always plenty of room for both American and Canadian REITs in my portfolio. If you are thinking about investing in any of these REITs, remember that I am only the beginning of your research. A financial advisor is the end. If you guys loved this video, be excited, there is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.